Good morning to those that have just joined us. I'm going to be starting the webinar very shortly. I'm just waiting for a few more people to enter the room and then we'll get started. And good morning to those as well who are joining us live on our Resi Facebook page this morning. Okay, just 2 more minutes, everyone. I can see that we've still got a few more people entering the room. Okay, there's a few more others that I can see are attempting to join now. Good morning to those who have just joined us. Welcome to the Staircasing and Equity Loans webinar. We'll be starting very shortly. And good morning again to those who are joining us on the Resi Facebook page this morning. I anticipate we're going to just wait for a few more people to join and then we will kickstart the webinar at about 5 past, so 1 more minute. Just a few more moments. I can see a few more people have just joined us. Welcome to the webinar this morning. Okay, the numbers are still going up very slightly, but I think we're going to kickstart the session now. So good morning, everybody. To those who've joined us on Zoom and on Facebook Live, welcome to the Staircasing and Equity Loans webinar. My name's Sarah Ellis. I'm the Head of After Sales at Resi. For those of you who don't know us, Resi is the shared ownership brand of Metropolitan Thames Valley Housing, and we are the 5th largest housing association in the country, and we're focused on providing affordable housing for people living in London, South East, East Midlands and the East of England. Now, if you've joined us today, I imagine you're an existing shared owner or you hold an equity loan. And I'm sure you've been thinking at some stage you'd like to own more of your property or even achieve 100% ownership. Now, you may have been following interest rate updates, but equally thinking about rising or falling house prices in your area. So when is the right time? Now, I've got our shared ownership financial advice expert, Paul Wilson, with us today from Just Mortgages. So hello, Paul, and thank you for joining us this morning.
Thank you, Sarah. Good morning to everybody.
Now, Paul will be talking you through potential options and considerations, and will be advising you on how you can reach out for an independent review of your current position. Now, Just Mortgages are one of our recommended financial advisors, and they provide advice and mortgage information to our shared owners when they're considering buying more shares, redeeming an equity loan, or generally thinking about moving. Paul will be giving us an overview on how they can help a little bit later on in the webinar. Now, if you wish to ask either of us any questions, please just use the chat box at the bottom of your screen, and we'll answer any questions that you might have at the very end. Now, make sure you've got your phones on the ready, because I've also included some helpful QR codes which will direct you straight through to any relevant web pages. So get ready to snap away on your phones. Okay, so let's get started. Now, I imagine when you bought your home, you purchased the largest share that you could afford, and your main priority at the time was to get into your new home. Now, you might now have been there for a year or more and thinking about how you can go about buying a bigger share or redeeming your loan. Now, this might be because you started to earn a bit more, your mortgage might be up for renewal, or you might be able to borrow a bit more, or perhaps you've even come into a lump sum of money. But whatever your reason, we'll explain the process in detail today and hopefully give you a good feel for whether buying more shares or redeeming your loan could be right for you. Just going to move through the slides. Okay, right, before we do, I'm just going to wake everybody up with a quick poll. And I'm really keen to understand how long you've all been living in your property at the moment. So you should be getting a pop-up now on your screens. Should be arriving now. So have you been in your home for 1 to 2 years, 3 to 5 years, 5 to 10, or 10 years or more? Okay. Okay, fantastic. All right, so it's interesting there to see a range of answers here, but it's clear that it typically takes a few years before people start thinking about buying more shares or redeeming an equity loan. But it is important to know that you can do this at any time. Okay, I'm just going to move on to the next slide. Okay, so I guess the first question to ask is, why might you want to buy more shares or redeem your loan? Now, there are several reasons, and I've listed some of the benefits that our customers have expressed. Increase equity. When you buy more shares in your property, you gradually build equity, moving you one step closer to owning 100%. Now, equally, redeeming your equity loan means you also benefit from 100% equity in your home, which many of your customers have benefited from higher returns when they then go to sell. Now, in terms of buying more shares, if you are a shared owner, you would benefit from reduced rent. When you own more shares, you'll be paying rent on the smaller share. So MTVH basically charge rent on the share that you don't own. So if the unacquired share goes down, your rent would also then be adjusted. Now, for those of you with an equity loan, whilst you have an equity loan, you're unable to obtain additional borrowing from your lender for anything other than the repayment of that equity loan, or occasionally pre-approved structural home improvements. Now, for My Choice Home Buy customers, there would also be no more interest payments to make. So that's another consideration you might like to think about. Greater control. Now, if you desire to live in another area or another country, I know I certainly would, although I'm not so sure I could handle the heat abroad at the moment. Or you'd even like to maybe consider keeping your home as an investment property and rent it out. Now, you're unable to do so unless you've paid off your loan or you own 100%. Now, it's really, really important that you follow the appropriate route, because if someone was to be a little bit naughty and they did this without going down the approved channels, it could be investigated as social housing fraud. So it can be quite serious. Now, it's also really important, if you were ever considering going down that route, it's also worthwhile speaking to your lender or your financial advisor just to make sure that your current lending position supports that as well. Now, home improvements are also much easier when you achieve full ownership. Now, it's important to remember that if you're considering doing a big structural project and you own a share of your home, when you go to sell, you'd still only benefit from the share that you own. If, however, you staircase to 100%, you benefit from the full return of your investment. Gradual increase. Now, if you aim to own 100% of your home, you can do this in gradual stages. Some customers like to staircase to 100% all in one go. But this isn't always possible for everyone. And I would encourage you to discuss this with your financial advisor whenever your fixed term is coming to an end or you come into some extra money. If house prices are increasing in your area, you might be thinking about buying shares at today's value rather than in a few years' time if prices could be increasing in your area. But it's also important to understand that sometimes prices can go down, which equally is a good time to buy more shares at the lower rate. Now, lastly, owning 100% of your home empowers you with all of the above. So as you can see, there are some potential financial benefits, but it's also worth speaking to a financial advisor to get clarity on how it will affect you, particularly if you plan to borrow more on your mortgage in order to purchase more of your home. So on that note, I'm going to hand you now over to Paul at Just Mortgages, as I'm sure you'd all like to know a little bit more about what house prices are doing and the kind of conversation a financial advisor might have with you. So over to you, Paul.
Thank you, Sarah. Good morning to everybody on today's webinar. As Sarah said, I'm Paul Wilson. I'm head of Just Mortgages, new build and shared ownership division. A little bit more about the division. I have a team of 25 shared ownership specialists who advise clients every day on purchasing shared ownership units or selling, and particularly with regards to staircasing. And what I'd like to talk about today within the webinar is a little bit more about that shared ownership journey from our side of things, and in particularly staircasing. So thank you, Sarah, for the next slide. Just to discuss, first of all, why a client initially purchased a shared ownership property. And even in 2023, we're being told this is the year of shared ownership because there's no more Help to Buy and affordability. But initially, many clients, whether they're first-time buyers or other clients within the market, wish to buy a property where they either lived with parents or in rented, or they wish to purchase a property close to work, or maybe all of those bits and pieces. And upon financial qualification, the clients would have realised that the aspiration of purchasing a property within that particular postcode wasn't a possibility. And therefore, the aspiration and the dream of buying their first or second property but having their own home was still there. So shared ownership then became a strong possibility. And as I say, I'll always repeat, the aspiration is always to buy 100% of the property. So after qualifications, people then would view a shared ownership property and then, of course, consider an option of what they could afford. Thank you, Sal. So this is the shared ownership property ladder we use quite a lot, or I call it the aspiration ladder or the shared ownership journey. And we just highlighted a few percentages there that probably could relate to your current shareholding on the webinar today, whether it could be 25, 50, between 75 and 100% is often the aspiration. The figures and the stats tell us as a company, 25% to 30 seems to be the average shareholding within the London area and the London boroughs. And then between 25 and 50% shared ownership is a common figure outside of London across the postcodes. So we know, as an example, we have many people about the 25 to 30% figure, but as Sarah's already noted to you, that the Resi offering, you can of course staircase to 100% ownership depending on affordability. Thank you, Sarah. For the next slide. So this is common situations we see every day. So if we set an example, a client, and it was interesting on the poll there, Sarah, that many clients were confirming they'd lived in their property between 3 to 5 or 7 and 10 years. And I think this really highlights what we see every day when we review clients' shared ownership and their current mortgages, is that the aspiration to purchase 100%, as we can see in the title there, common client situations, homeowners have not reviewed their shareholding options since their initial purchase. And some review their mortgage options, some don't. Again, many don't review the current mortgage. And of course, we're in a changing world of mortgage rates and criteria and mortgage lenders. But if I come back to the aspiration or the dream ladder, as we call it, it's clear on these conversations that every client would still like to purchase 100% of the property they own. So the big question is why? Why does this not happen? And I think the main reason is clients obtain their dream home at say 25% as an average, and then they settle into normal life, new bills, new outgoings if they've been living at home, of course, a different lifestyle. And these things sort of take over. And I must be honest, not many people wake up in the morning and think, do you know what, I must staircase my property today or look into staircasing my property. Yet we know the aspiration is still the same if they can. So, and also I think some clients think the 25% or 30% is the maximum they could possibly afford for quite a few years, so they don't review. However, as you've highlighted already, Sarah, when we do review with clients who purchased, say, 5 or 6 years ago, we notice the salaries have mainly changed, more along the positive line of pay increases. They would probably have had a car loan 5 years ago, and that would have been redeemed. And sometimes that car loan payment is just going towards other nice things rather than staircasing. Or credit cards have been paid off. Or as you say, they may have inherited a lump sum. So various points where it could trigger a staircasing opportunity just isn't discussed because other things take over. Thank you, Sarah, for the next slide. So a big part when you purchased, particularly people within, say, 3 to 5 years ago and 5 to 10, and my title on the slide there, are mortgage lenders supporting shared ownership. Certainly compared to a few years ago, where you'd have had a very limited panel of mortgage lenders offering shared ownership products, this is a huge part of the lending world now, the shared ownership from government to the mortgage lenders. And I meet all the mortgage lenders on behalf of Group for shared ownership. And it's very positive that many more lenders have come on board to enable people to purchase shared ownership, to get a percentage of their dream home, and of course to assist in staircasing. Thank you, Sarah, for the next slide. So what I've done, I've just mentioned a few lenders here. I mean, from a few years ago, where there may be 3 or 4 lenders, we do have access in excess of 20 lenders now within the shared ownership sector. So we have a huge choice. So when we do speak to clients upon review, and your lender may be on the list there, who your current mortgage is with, there's many high street lenders within the shared ownership sector now. And then we have many smaller lenders, or niche lenders as we call them, who have also entered the market. All different criteria, different loan to value. So when we do review the clients, we would look at your existing lender and what they're offering, but we can compare the market much, much more in detail, of greater choice for you. Thank you, sir. Now, just an example of the Leeds Building Society. They're one of the biggest supporters of shared ownership mortgages, and my regular meetings with them, they're telling me 19% increase, as you can see on the slide there, in shared ownership applications year on year. So it shows you again from the first slide of people looking for the mainstream market of full ownership, the direction of travel is that they're being on affordability towards shared ownership, and that's just an example of one lender, how business has increased within the last year. Now, the Leeds have brought in a fantastic saving product, and this is designed for staircasing. So this was just launched recently. and it's a savings account with, as you can see, with an interest rate of 6%. And the main message is the Leeds Building Society want to try and get clients saving. We're not a nation of savers sometimes, as I say, other things take over. But to offer an interest rate of 6%, they want to try and get clients to structure a regular savings plan. So in 2 or 3 years' time, they've got a cash lump sum rather than inherited from their own savings at a great return of the 6% they're offering, which would then help to put towards staircasing along with any mortgage increase or capability. So the secret there is, if you have surplus salary, obviously interest rates have increased recently, to get the return and then discuss the mortgage opportunities with you as well to staircase, because some of the new leases upon shared ownership, there is a 1% offering, or you may be a 5% offering and higher. But a bit of savings, a bit of mortgage, this will definitely increase your percentage upon underwriting on that staircase and ladder on the original slide, which is the aspiration. So a fantastic product. I can only imagine more lenders will follow with regards to, I suppose, dangling a hook to save for staircasing, because the lenders want you, as Sarah said, to purchase as much percentage holding throughout the years. And then, of course, one of those benefits is you actually pay less rent. Thank you, sir. Now, always a great talking point, always in the news, in the headlines, the property growth index is over certain periods of time. And interesting on the poll earlier that quite a few people have been within their properties between 3 and 5 years. So just to highlight, just over the last 3 years, with regards to June 20 to say June 23, we can see on the growth index there, the amount of property growth over that period just within a 3-year term. Now, the benefit of most mortgages within this example of a 3-year period, for everybody on the webinar today, you would have had a capital and interest mortgage or a repayment mortgage. So your actual mortgage amount you borrowed 3-5 years ago would have reduced every year. So what you'll own by June 23 will be a lot less than 3 or 5 years ago. But of course, look at your property growth. And as Sarah highlighted, if you have gone 2 years ago from 25 to 50% or 50 to 75, look at the equity growth you would have seen rather than the rent payment throughout that period. We all are aware of, with the cost of living and the interest rates recently, we can see at the end of the graph that the property prices have begin to level. But of course, the prediction and hopefully the inflation news will be positive from last week throughout the next few months. And already I'm seeing this week on the back of that news, the mortgage lenders seem to be reducing a lot of fixed rates this week. Speaking to Sarah earlier, I've had several lenders email me already that they're repricing their rates this week. And the positive thing, they're actually coming down. So in historical terms, we know when that happens and the activity grows, we normally see this growth index go yet again. But hopefully that's been of interest, the property growth index, and hopefully, obviously, linking of great if you had more of a shareholding, what that would mean to yourselves. Thank you, sir. So, as I said, not many people wake up in the morning and think, I'm going to get a mortgage review, or I'm going to review my staircasing opportunities with Resi. So, working with Sarah and her team at Resi, we're calling this the Resi offering, where we wish to offer all the leaseholders and shareholders to be able to receive specialist advice from my team as one of their preferred financial advisors. And what will this mean to you? The benefits are, we will with one of my team, carry out a current financial situation review with you, go through your existing mortgage and obviously your shareholding review, and what are the best options for you now and in the future. So if somebody wants to review their fixed rate, which is expiring in 6 to 9 months, we're doing that on a daily basis. And of course, we will look into the shareholding with you up-to-date pay, bonuses, commissions you may receive now, and what commitments you have or not on car loans and credit cards, etc. Best options, as I say, the markets are changing every day within the mortgage world. We'll bring that to you of all the lenders we deal with to choose from. And the most important thing for everybody with a property on shared ownership is that you will have the staircase in knowledge and the process knowledge from start to finish. And what we've looked at is, and the poll has probably shown us that, is of course some people have been in the properties 3 to 7, 8 years, is with regards to staircase and shared ownership, a review every 2 years tells it's a good time that a lot of clients do actually staircase after 2 years of property ownership if they've had a review and the affordability is there. And as I say, after 2 years, your mortgage would have actually reduced from the initial loan amount. And some people are quite surprised how much their mortgage does reduce between 2 and 5 years on a capital and interest mortgage. So it's a fantastic offering to everyone there. I know family and friends, they're always asking me about interest rates, affordability, loan to values. My team can do everything and all questions, even if it's not now, if it's something for the future, for every leaseholder and shareholder there. Thank you, sir. The next steps are quite straightforward. We'll give you a few slides. Sarah will run through of how to contact Just Mortgages and my team to book an appointment. We've seen the property growth index. The biggest thing I'm sure many people ask themselves is what the current property value is in today's market. That will link into your mortgage amount. Think, actually, I'm going to review this. So you'll review whether you want a fixed rate, tracker, variable, how much you're outstanding, and the term. And as I say, that enables us to explore all the best options. And up-to-date budget planning. It's amazing how many people don't budget plan. We have the great lead saving account we'll be speaking to you about as well, if there is surplus salary. And the biggest thing, obviously, from this webinar is the staircasing review and the process and knowledge. So very straightforward for the next steps for you to receive this specialist advice. Thank you, sir. And just to highlight, there'll be a QR code, there's phone numbers, emails, which Sarah will be providing you with. We're available 7 days a week, and that can be via Zoom, telephone. We do have the team of advisors throughout the country, many in the London area. So if it's suitable at a workplace or one of our offices, not a problem at all. The main thing is to make contact. I'm sure you'll have lots of questions, if not today, but in the future. And over to you, Sarah.
Thank you so much, Paul. That was really interesting, and it's certainly really reassuring to see that things are starting to level out with interest rates. So interested to see how that transpires over the next coming days. And just to reiterate to everyone, I'll be sharing Paul's and Just Mortgages details again at the very end of the webinar. So hopefully you can see there are some great reasons why people purchase more shares of their home, and it can have a really positive financial benefit. Now, if you would like to test out how you might benefit, you can actually try our monthly calculator on our website. Now, I've added the QR link here, so feel free to tap away with your phones. I've got the website address and details there as well. Now, it won't give you precise figures, but it will give you a bit of a feel for what the financials could be. And of course, you can speak to Resi and Just Mortgages in more detail. Now, there are, of course, some costs involved, and it's important to be aware of what those costs are. Now, firstly, you'll need to pay for a valuation report from a surveyor who's certified by the Royal Chartered Institute of Surveyors, otherwise known as RICS. Now, we'll tell you more about this process shortly, but a typical valuation would cost about £240. And you can use one of our recommended panel of surveyors who have great knowledge of the shared ownership market. Now, secondly, if you're borrowing more money on your mortgage to pay for your larger share, there might be lender's fees, and your financial advisor will be able to tell you a bit more about this. And thirdly, you will need to appoint a solicitor because there will be fees involved here as well. And we really do recommend that you appoint one of our recommended panel solicitors. They have loads of experience in the process, in the shared ownership lease. And I know it can be really, really tempting to instruct a solicitor who's the cheapest, but you should be really careful to make sure that they do have the relevant experience, that they understand the shared ownership lease, so they know, that they're going to to be asking the right questions, and that there aren't any hidden added on fees. Now, a great solicitor can often save you time and money, and it will really help to speed up the process and reduce the hassle along the way. Now, we will send you some links of our panel recommendations for solicitors and surveyors after the webinar. Now, finally, and very importantly, if you get to the stage where you own 80% or more, there might be stamp duty implications, which you should speak to your solicitor about. Now, we don't charge any administration fees for supporting you with a staircasing transaction. However, there is an admin fee associated to equity loan redemptions, and that's £175. Now, it's also worth bearing in mind, if you do have a different landlord, they may charge some additional costs, but if you reach out to us in the team, we'll be able to explore that with you. Okay, so now you all know about the potential benefits. The next question is, how does it all work? But I'm going to just wake everybody up again. We're going to do another quick poll. I'm just interested now, those of you who are interested in staircasing or redeeming, what are you thinking of going up to? 40%, 50%, 60%, or the rest and taking the remaining 100%? So a poll should be coming up on your screens now. I can see the answers coming in. Just wait a few more moments. A few more coming in. I feel like we need some elevator music here now. Okay, and I'm about to end the poll now. Okay, so as you can see, there are a range of answers. It's clear that some people are considering going to the full 100% and others a gradual staircase. Now, I'll go on to talk about equity loans in a bit more detail shortly, but the first thing to highlight from this poll is that the process of buying more shares is very flexible. You can buy any amount that you like, from 5%. So you might choose to buy 6%, 16%, 56%, etc. The only restriction to be aware of is that once you reach 90%, you have to buy the final 10% all in one go. Okay. So how does buying more shares work? Now, firstly, it's really worth noting that you can kickstart the process on the Resi portal. Now, if you just log in and go to buying more shares, now I have included the QR code, so feel free again to snap away on your phones. I've also included our website address here again. Now, we will assign an after-sales consultant to you who can help answer any questions that you might have along the way. But the first thing you'll need to do is get a valuation from a RIC certified surveyor. Now, this is needed so we know how much your property is worth and how much it will cost you to buy more shares. So, for example, if the valuation shows that your property is worth £300,000, it will cost you £30,000 if you want to buy 10% more. Now, that, of course, does exclude all of the other costs I've mentioned previously, like the solicitor's fees. Now, it's also important to note here that if you've made any structural home improvements since you purchased your property, then you should let the surveyor know. They can then provide us with a value that extracts the value of the home improvements, and that means the price of your additional share will exclude the value of your home improvements, so you don't end up paying more. Now, those home improvements, this is really important, it must be structural and it needs to be approved by MTVH. So make sure you're reaching out to the teams for that approval. Now, once we've got your valuation and we know how many more shares you want to buy, we'll send you an offer letter that shows the price. Now, this price is valid for the length of time the valuation is valid for, so typically 3 months. However, you can actually extend it for a further 3 months, and that's usually through a small fee with your surveyor. Now, the good news is that a standard staircasing transaction that doesn't involve a property sale shouldn't take more than around 6 weeks. Now, you should instruct a solicitor as soon as you decide you definitely want to proceed with staircasing. Your solicitor will then help you complete all the necessary paperwork and they will finalise your transaction. And once we've received the funds, we will then send you a memorandum of staircasing, and that's your official document showing the new share that you own. We'll then update all of our systems with your rent, if there is any, and your direct debit will then be updated. If you go to 100% rent, then wouldn't be applicable. If you staircase by an extra amount, your rent would also be adjusted in line with the unacquired share. And that's it. You then own more of your home. Now, I should note that there may be some of you listening today who have bought your home quite recently, and you might have a lease that allows for 1% staircasing. Now, if this does apply to you, you can obtain your 1% calculation through your Resi portal. And again, I've included a copy of the QR codes that will guide you through to this page. Now, here you'll be able to request a 1% calculation. Now, this system feeds directly into Land Registry, and it will obtain a real-time valuation and provide you with the 1% premium. You're then able to decide if you wish to proceed or not. Once the premium is paid, we'll provide you with a memorandum of staircasing, which is your legal document entitling you to that 1%, and we'll update our systems accordingly. Now, for those of you with an equity loan and thinking of paying off your loan in part or in full, depends on the type of loan that you have. Now, some loans allow for partial repayments and others require the amount to be paid in full. So if you're unsure of the type of loan that you have, I would encourage you to reach out to the equity loans teams who will be able to advise you. I've also spoken to quite a few people who are key workers as well, and they're conscious that they're not working in key services and they'd like to redeem their equity loan. It honestly couldn't be easier. The process is actually pretty simple. It can be concluded within a matter of a couple of weeks. But it's important to mention that this process is not initiated through our Resi website. It's actually facilitated on the MTVH website. Again, QR codes and the website and team addresses there as well. Now, you will need a valuation to be completed by a RIC surveyor, and you'll also need to appoint a solicitor to act for you. Now, if you pay the loan off in full, you would need your solicitor to have the loan charge on your property removed from Land Registry, and that part is key because it gives you the ability to benefit financially from full ownership should you then decide to sell and move on. So hopefully this gives you a good idea of how staircasing and equity loans process works. As you can see, it's not complicated, it doesn't take much time, and there's just a few more things that I'd like you to be aware of before we move on to our Q&A session. Now, firstly, if you're a shared owner, you might not be aware of how many years are left on your lease. I would recommend that you investigate that part, particularly if you want to borrow on your mortgage to purchase more shares. So if your lease has 80 to 85 years left, some lenders can be reluctant to lend. The good news is, though, is that you can typically extend your lease at the same time as buying more shares. And there's actually a guide on our website that describes this lease extension process in a bit more detail. Now, the other thing to be aware of, if you're in a taller building, is your building status with regards to cladding and the Building Safety Act. Now, I'm sure you all know many buildings have been subject to surveys to identify whether there's any work that needs to be done to bring it in line with the new fire safety standards. And once a building passes the survey, it gets what is called an EWS1 certificate. Now, if you're looking to remortgage in order to purchase more of your home, your lender may require to see a copy of this certificate, and you can get more details about this on our website. Now, over the last year, we've helped hundreds of customers own 100% of their home, increase their shares, and redeem their equity loan. Now, that excludes all of those who sold their shared ownership home and then they've gone to purchase outright on the open market. Last year, we helped over 600 customers to achieve full ownership. Now, it's something we absolutely love to see, and it just goes to demonstrate how shared ownership can genuinely provide a path to full home ownership. So if anything you've heard today is tempting you to purchase more shares or redeem your loan, please just get in touch with us through the various portals mentioned today. Thank you all very much for listening. And on that note, I think we're now going to open it up to a Q&A session. So feel free to use that chat section. But I'll just wait for a few more questions to come in. Okay, someone has just posted a question about fees incurred when you buy more shares. Yes, every time you go to Staircase, there would be legal fees associated and surveyor's fees included as well. It is worth noting that if you are thinking of staircasing, I'd always recommend in going for the highest share that you possibly can. Typically, customers will staircase over time in 3 transactions to achieve full home ownership. Okay, I've got another question here. Can I add another person to my property when I staircase? Yes, you can. If you're staircasing to 100%, you absolutely can add another customer to your lease as part of a remortgage, or if you've been fortunate enough to pay everything off in full, we would just get that amended for you. If you are staircasing to own a share, then the second applicant would need to make sure that they are also able and eligible to proceed with shared ownership. So we'd be looking at things like, are their earnings under 80,000 or 90,000 outside of within, whether you're inside or outside of London, whether they own another home in the UK or abroad. But again, we'd pass you over to one of our recommended panel advisors and they'd be able to guide you through the process. I'm going to leave Paul now to answer a couple of questions that are coming in.
We've got a question again, seems to be fees. They've taken recently advice that solicitors are generally charging fixed fees for conveyancing on properties over a certain number of stories, and this is probably linked to what Sarah just mentioned with regards to the cladding requirements and the building standards. I would, as Sarah said, probably try and speak to a specialist within the shared ownership on solicitors. The fees can vary, and yes, with regards to lease properties and the more in depth with regards to the EWS forms, I have noted that yes, solicitors may be slightly higher than say a normal transaction. Not saying that there'll be massive savings out there, but I think the specialist advice you would need at that time, as Sarah, with regards to the building standards which have changed, is the actual key element of when you staircase.
Fab, thank you. There's a couple of really good ones in here about staircasing. I'm worried about buying more shares because when I come to sell, it will be harder to sell with a higher share. So actually, you only have, depending on your lease, 4 to 8 weeks for us to have the opportunity to give another shared owner the benefit of buying your share. Now, we sell shares in all sorts of sizes. If you have a look on our website, we've got shares from 25% upwards of 70%. So we've got quite a range of shares available on our website. Now, if for whatever reason your share isn't sold within a certain time frame, you're then able to offer your property out to the open market at 100%. Now, the benefit of owning that higher percentage is obviously for you, because you will benefit on the return of the share that you own. Another really good question that's just come in on 1% staircasing. I should probably note that there are no legal fees and there is no RICS valuation associated when you are staircasing to 1%. This is why so many customers choose to go down this route, because you can purchase an additional 1% every year without incurring legal costs or the fee for a RICS valuer. As I say, everything is tapped into the Land Registry portal. It will draw out that valuation figure for you. You simply decide if you wish to proceed with that premium or not. You would have a legal fee associated, so that is something to sorry, there wouldn't be a legal fee associated with the 1%. But going on to equity loans, there's another question that's just come in on the equity loan side about solicitors' fees. Yes, again, I would recommend that you would go to one of our panel lawyers who would be more than happy to assist you with that. We can certainly share their details with you, and you can go to them directly to find out what that might cost in terms of those legal fees. And Paul, there's a really good question here that's come in about remortgaging and staying with the lender they're currently with, or best to shop around.
Yeah, it's a great question and a very common question my team see from clients. With regards to remortgaging, under the review with my team, they would certainly look at what the current lender you're with, the name of that lender, the term, the amount outstanding, and we would be able to advise you on their current rates to you as an existing customer. And that depends on if you're obviously remortgaging just on the rate itself, so you're having a rate review, or whether that's a rate and staircasing review. And that's the direction of travel, where to receive special advice on what your current lender could offer, plus compare that to the many other shared ownership lenders which we've got within the sector at the moment. So it could be your existing lender, or it could be another lender. That would be the great key element of a review, and a full review on both parts for you.
Thanks, Paul. There's another really good question that's come in. I've still got 2 years left on my fixed rate mortgage. Can I buy more shares with the second mortgage while I still have the first fixed mortgage in place? Yeah,
again, a good question. And with regards to raising more money on your existing mortgage lender, obviously that's subject to review, which we would go through with you. And if that's a possibility to raise more funds to staircase, of course, the criteria and rates would have changed from 2 years ago. So quite often, the term of your initial loan would be reviewed. The 2-year fixed rate would continue running, because otherwise you may have redemption penalties on that, which my team can review. But also we can highlight, if you raised, as Sarah said, as an example of, say, a 10% of 30,000 against 300,000 value, we would look at options on that 30,000 with your current lender. So you could have 2 products within the same mortgage lender, and obviously the second loan would be for the staircasing, and initial loan would have been for, as an example, your initial purchase. But again, a great reason why to touch base to receive a full review on all parts.
Great, thank you. There's a question here about equity loans. What happens when you reach the age of retirement and want to redeem? Well, the first thing I would definitely encourage you to do is reach out to the equity loans team, so you can discuss the options with you and what that would mean in terms of redemption, whether you're thinking of staying in your existing property or moving and selling on. Okay, any further questions? What kind of work is categorised as structural home improvements? That's a very good question, and one that we are asked quite commonly. So structural home improvements is any sort of home extension that you do if you're thinking of adding on, another room to your property. You're thinking of doing a single story extension, double story extension. If you're thinking of knocking down a sort of a main supporting wall, all of those sorts of things are considered structural. If you're unsure, I would recommend that you reach out to the teams and ask whether the work that you're proposing to do is considered structural or not. I missed the meeting. Is this recorded? Yes, it is. The meeting is recorded, and we can certainly email this out at the very end. Is it free to get an idea of what the cost would be before going through the process of staircasing? Absolutely, we can give you an idea of what that could cost. If you go onto our website, there is a cost calculator, which can give you a rough idea of what that might be. We can also give you the details of the solicitors that we use, and they'll also be able to provide you with a quotation of their services. Stamp duty, there's a question that's come in about stamp duty. Is it calculated on the value of the entire property or just the staircasing value? So when you go in and you purchase a shared ownership home, you're often given the opportunity there and then if you want to pay stamp duty in its entirety, or you wait until you achieve 80% ownership. When you achieve 80% ownership, stamp duty is calculated based on the full market value of your property. So I hope that answers that question. I would always recommend that you speak to a solicitor. They'll be able to do a calculation for you and be able to give you an exact figure. Okay, I had a RICS survey done pre-pandemic. Will you accept a desktop survey? It's likely actually that your RICS surveyor won't provide you with a desktop, given that your initial survey is quite old. What I would do is I would keep an eye on your emails, because we are going to be doing a promotion very shortly, which will be actually offering you some money towards a RICS valuation. So keep an eye on your inboxes. There's a promotion coming out very shortly for staircasing. I wasn't able to staircase due to redundancies during the pandemic. Firstly, I'm very sorry to hear that. I know that it certainly affected a lot of people. But certainly if your financial position has changed, I would urge you to reach out to Just Mortgages, and they will be able to do an assessment for you and let you know what possibilities are and how we can move forward for you. Okay, I think we're coming to the end of our questions now. Thank you all so much for being so engaging and listening today. And thank you for Paul as well from Just Mortgages for hosting with me today. I hope you found the session to be informative, and I hope we've covered a number of areas. As I say, if you have any further questions, if you're considering dipping your toes into owning more of your home, or considering redeeming your equity loan, partially or in full, please do reach out to the relevant team members here. We've got the QR codes, email address and telephone numbers and website addresses, so plenty of means to get in contact. Thank you all once again, and we hope to hear from you soon. Thanks very much.
Thank you, Sarah.